Hello, everyone. Happy new month to you. Welcome back, and I'm so excited to be here with you this morning. Before we kickstart the session, let's confirm that we are good to go this morning. If you can hear me and you can see my screen clearly, please type in hi in the comment section and let's get this party started. I would like to see some feedback, please. I'm waiting. Okay, so what do we have here? Let me see. Just trying to load up my comment section. Okay, I can see 855 6040 202 589 Valerie. Good morning to you. Glad to have you around. Nikki 7. Hi, good morning. Sam 23. Ramon 85. Good morning to you too. Happy new month. X Trend Carry. Good morning, happy new month to you too. 9163. Good morning to you. All right. So let me take this as a positive feedback that we are good to go this morning. So first of all, let me state here that I am still having a bit of a sore throat, and it's getting better anyways. I saw my doctor yesterday and he told me to do a little bit of talking, take a lot of hot water and the likes, and things are getting better. I think my voice is better of what it was sounding like yesterday, and I think you can hear me very, very well at this point in time. So please bear with me. It might still look a little bit uh, different from what you are used to, but I will try as much as possible to make it clear and engaging despite this temporary challenge. All right, everyone. So, welcome once again to another insightful session of our weekly price action based technical analysis series right here on the Extra Speed Live. My own name is Sharif Daramola, and for the next 1 hour, we shall be dissecting the current market structure using simple yet powerful parameters such as trend lines, key levels, and of course, chart patterns to uncover valuable insight into the historical price movement of all of the assets on our watch list for this week. So for this week so far, we have four assets which we have been monitoring. The first one is the US All Sports, the USTech 100, the GBPUSD, and of course my favorite, the XAUUSD, which of course we have been doing very well so far. We've been doing fair enough across the financial asset, and of course we are going to be looking at that in a detail. And for those who are joining us for the first time, you are highly welcome on board. Well, what we simply do here is to come together as a community gathering in anticipation of the New York trading session. And what we simply do here is to review our existing position, manage our current position, while we also um, strategically position ourselves ahead of the New York session. And this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So once again, you are highly welcome on board. So with that being said, we shall be diving right into the business. And the first thing we are going to be doing today is to check on the economic calendar. As you all know by now, these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, enabling us to position ourselves in such a way that we can catch any potential trading opportunity prior, during, and even after the event. Now, on the economic calendar for today, Tuesday, August 1st, we only have 1 hour impact event coming in from the US economic docket, and this is going to be happening in about 3 hours from now. So, as I was saying, we have one major high impact event coming up today from the US economic docket, which will be coming up in about 3 hours from now, I think. And that is the ISM Manufacturing PMI, which is always released by the Institute for Supply Management. And in fact, this index shows us the business condition in the US manufacturing sector. And of course, it is considered to be a significant indicator of the overall economic condition in the US. Now, from this, the data here, if anything above 50 is seen as positive for the US dollar, while anything below 50 is seen as negative. Now, from the previous data we have here, the previous data came in for the month of June at 46, and we have a general consensus which is projecting a 46.8, which is a little bit on the high side, but it's still right below that 50 mark. So we are going to be looking forward to what the actual data is going to be. Will it be as expected, below expectation, or even beyond expectation? But one thing we want to be doing here as technical traders is to try to sniff the current market structure to identify tradable setups that is gradually evolving prior to this event so that we can capture that move when it finally happens. So with that being said, let's dive right into the business for today. So the first asset we are going to be taking today, as usual, is of course the US All Spot. Now on the US All Spots, in the last 24 hours, we have a very profitable position on this asset. Remember, I told you we have been buying this asset since the beginning of this week. And so at the beginning of the week, we had this range identified where price action was trading between the $80.20 level and the $79.93 area to give us an insight into the level of indecision at that point in time. And you know how we do it in this community. When price action falls into such a range, we want to wait patiently for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, with this situation here, prior to the beginning of the live session, I told us all that I already have a buy position triggered, which of course we added more positions at the breakout of the $80.50 level. And I told us all yesterday that we can capitalize on that move if you had missed out on those previous buy positions, that a breakout retest of the $81 mark will definitely welcome more buy position. And for those who had missed out on those triggers at the 80.20 and 80.50, you must have been able to capitalize on this one, as we saw price move over 70 pips in our favor before the bearish momentum began. And if you had moved your stop loss accordingly, definitely you would have been taken out with a modest size of profits, or at a worst case scenario break even if you had moved your stop loss to your entry point. So once again, well done to those who are taking advantage of this move. Now that we are going into the New York session today, what is really going to be our plans? How do we intend to position ourselves ahead of the New York session today? Now, the first thing I would like to do here before we go into the nitty-gritties of what our expectations will look like is to scale up into the 4 hours time frame so that we can have an holistic perspective into what is really going on in the market at this point. And to refresh our memories, remember at the beginning of the week, we took into consideration the nature of price action since the beginning of the month of July. And what we were able to come up with here was quite interesting, as we saw that price action was more of the bullish side. As you will see, price continue to find higher highs and higher lows since the beginning of the month. And to further emphasize the strength of the buyers here, we were able to connect the series of higher lows, and in fact we had a couple of trend lines which has been supporting that bullish momentum. And of course, you know how we do it in this community when price action, when we have an ascending trend line like this, as long as price action remains above the ascending trend line, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, with the situation we had here, we had no other choice than to look out for buying opportunity since price action remained above the ascending trend line. Now, if we zoom right into the current structure, as you will see here, we were able to identify a key level which we said we were going to be using to guide our trading activity for the week, and this is situated at the $80 mark. This level right here was a strong selling niche sometime last week. As you will see, we saw it was a strong selling niche before we saw the breakout happened on Friday of last week's trading session. And you all know from a technical standpoint, as soon as price action breaks out of a key level such as the $80 level, we expect that at some point in time price will come back and retest that structure in anticipation of another wave of bullish momentum, which prompted the idea of buying the US oil spot yesterday morning. Now, with the situation we have right now, you will notice that as soon as price action tested the $81.75 level, we begin to see selling pressure resume in this market, giving us a clue that we might likely be seeing some profit-taking activities go on in the market right now, which of course always is a sign that which always reflects on the chart as a retracement phase. Now, with the situation we have right now, will this selling pressure continue, and how far will it go before another wave of bullish momentum will happen? Now, to guide our trading activities, remember we have an ascending trend line which we spotted earlier. In fact, we have a couple of them. Now, how far that retracement phase will go, it depends on how the market will react with either of this ascending trend line. So if it gets into this trend line, we shall see and wait. We shall wait and see how the market will react to that level. If we do have a breakout of this, if we do have buy pressure resume here, we're going to be joining an uptrend continuation. But if a breakdown happens, then price we'll be looking at the $80 mark area one more time, which of course shares a beautiful confluence with that second ascending trend line, which depending on how price action reacts to this level, will determine if we are going to be joining an uptrend continuation or a downtrend if a breakthrough of that level happens. So from an holistic point of view, this is how we are going to be managing our positions here. Now, for us to have a better perspective into what is going on, we shall be scaling down into the 1 hour time frame where we begin to see things more clearly. Now, we're going to be focusing on the $81 mark, which of course has been a major determinant of price action since the beginning of the week. We saw how it was a buying here, and price action is back into that zone. So if a breakdown happens, we might likely be getting ready to join a counter trend opportunity, and if buy pressure is observed, we will be getting ready to buy an uptrend continuation. So with this information we have gathered here on the 4 hours time frame, let's scale back down into the 1 hour time frame where we begin to see things more clearly. So right here on the 1 hour time frame, we are back into that structure, and here is the $81 mark, which I spotted to you on the higher time frame, as you will see here. Now, one interesting thing you notice here is that price has been finding lower highs since the later part of the New York session, giving us a trend line after connecting the series of lower highs. Now, going into the New York session today, this trend line is going to be a yardstick that we shall be using to guide our trading activity for today. Now, what this simply means is that as long as price action remains below the trend line, we will continue to look out for structures and patterns that will support the idea of selling this asset at this point in time. However, If a breakout of the ascending trend line of the descending trend line happens, then we will consider buying the US All Spot. Now let's talk about the bearish expectation in this market. Now, if we are going to be selling, of course, we want to be looking out for selling opportunities below the $81 mark area, which has been a very strong demand zone since in the last 24 hours. As you will see, our sellers continue to struggle as soon as price action gets into that structure. So for us to sell here, we would need a confirmation to happen, something like a breakdown retest of structure to sell this move to the downside. And of course, I told you earlier that we are going to be looking forward to see how the market will react to those ascending trend lines to determine if we are going to be adding more sell position or getting ready to join another wave of bullish momentum. So this is how we are going to be selling the US All Spot for today. Now, there is a caveat to this trading setup. If you don't feel comfortable taking short-term trades or you don't feel comfortable taking counter trend opportunities, I would advise you to stay clear of this breakdown retest of the $81 level, because it needs a level of patience, as you would need to be on standby to move your stop loss accordingly as soon as price action moves in your favor. So if you are a counter trend trader, well, this is a very good opportunity to capture any potential move to the downside. Now, for those who would not take advantage of this counter trend opportunity, you want to hold on and see how the market would react to either the $80.50 level, where if buy pressure resumes around that area, we want to be joining a bullish move, and of course the $81 level, where depending on how price action reacts to the structure will determine if we are going to be joining a bearish move or getting ready for an uptrend continuation. So that is that on the US All Spot in terms of selling this asset. Now, in as much as we're looking out for the potentials of sellers here, remember how we do it in this community. We don't want to ignore the potentials of the buyers too as well. In fact, this price action has been very bullish in the last 3, 4, 5 weeks in this market, and to ignore the potential of buyers at this juncture doesn't seem reasonable at this point. Now, what is it we are going to be looking at to buy the US All Spot today? Well, like I said earlier, we need a breakout of this descending trend line, which of course will indicate that this trend line may no longer be able to reject the bullish attempt. So if we cite a breakout of this trend line and of course the breakout of the $81.40 level, then at this point we want to be getting ready to buy. And for those who are joining for the first time, you want to be looking out for confirmation. It could be the retest of the $81.40 or the ascending trend line, but most importantly, we want to see bullish pressure, buying pressure. It could be a double bottom structure to join the uptrend continuation. So we are only going to be buying above the ascending trend line. And for those who are already profitable on the US All Spot for this week, we can afford to leverage on the profit we had made so far this week to test waters above the $81.40 level. So for those who are profitable, you can afford to have your buy stop order anywhere above the $81.40 level to capitalize on an uptrend continuation, while you have your stop loss, very, very important, below the $81 area, which will be dovetailing to approximately 35 pips. So let's see how the market will play out, and if it does continue to the upside, then a further breakout of the $81.75 level will welcome more buying opportunities in this particular market. So you can see we have a very simple setup here, where our center of focus is basically between the $81.40 and the $81 area, where the breakout of the $81.40 level will be supporting the bullish idea, while the breakdown of the $81 level will be supporting the idea of selling this particular asset. So these are my views here on the US All Spot for today. If you do have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument for today. In the absence of no questions, I want to assume that we are all on the same page. So permit me to move on to the next financial asset on our watch list for today. So the next instrument we are going to be taking, for today is going to be the USTech100, popularly known as the NASDAQ 100. So right now we have it's still very, very indecisive in this current market. Remember yesterday we were able to identify a range where price action was confined within, and that was between the the $15 800 and 15,810 level, and of course the 15,690 level, as you will see here, giving us an insight into the level of indecision in this current market. And one of the things we agreed here yesterday is that to capitalize on any move here, it is quite necessary that we take into consideration the nature of price action prior to today's trading, to yesterday's trading session. And of course we noticed that price action has been very, very bullish, and I said here that we will be anticipating a breakout of this level at the 15,750 to capitalize a bullish momentum, with the hopes that price action will find higher highs. But unfortunately we saw that this wasn't the case, as we saw price move about, how many pips was that? Moved about close to 40 pips in our favor before this bearish momentum began. And if you had moved your stop loss, you must have been taken out at a worst case scenario break even. Now that we have this situation going on, what is going to be our plans as we get prepared for the new week? Well, the first thing I would like us to do here is to scale up into the higher time frame. Let's run through what things are looking like from an holistic point of view, after which we shall come back into the 1 hour time frame to make an informed trading decision. So scaling up into the 4 hours time frame, remember I said it's a 4 hours of daily time frame. I think it's the daily time frame that we used. So let me refresh our memories on what we talked about on the daily time frame as regards to this current market setup. Well, the first thing we observed is that price action has been very, very, very bullish since the beginning of this year. And to emphasize the strength of the buyers, we were able to connect three trend lines here. We had the major one here. This is the major ascending trend line, which we connected before we saw a deviation from this ascending trend line happened in the month of March to give us this second trend line. Then we also saw another deviation happen in April from that one, and in fact we have this trend line, which of course is the present trend line that has been supporting the bullish momentum in the last 2 to 3 months. Now with this situation right now, the major trend line is this one right here. Then we zoomed in to see what has been going on since the month of June, and in fact we have a couple of key levels. Of course, we had the 15,350, which of course was a very strong buying zone for participants in the market throughout the course of last week. And then because of the situation, we were thinking that price action will continue to the upside. Now we went further to the downside, to the lower time frame, to see how the market has been reacting to the zone, which of course we want to look out for patterns that will support an uptrend continuation. Now when we scale down into the lower time frame, that is the 1 hour time frame, we begin to see things more clearly. So right here on the 1 hour time frame, we notice that price action has been ranging between the 15,810, and if we consider the impulsive move that led into this consolidation phase, we can agree here that this whole choppy scenario could transition to either a trend continuation pattern if price breaks out of the 15,810 level, which happens to be the resistance level of this channel, or the breakdown of the 15,690 could incite a reversal move that could welcome a retracement move to the downside. So with this information we have in mind, to guide our trading activity for today, Let us talk about the bearish expectation. And the reason why I said we should talk about the bearish expectation is this. Now, if we look at the highest point where price action is for this week, you will see that this is where price action was initially at the beginning of the week. Then we saw the next high is this one here, as price action was unable to break the previous high. Then we saw what happened here during the early hours of today. We saw another lower high, giving us a clue that sellers are gradually gaining momentum. But despite the lower highs here, we will notice that we yet to find a lower low to confirm the strength of the sellers, as we see how sellers have continued to struggle as soon as price gets into the 15,690 zone, giving us a clue that we have a strong buying niche around this area. Now, for us to consider selling here, I would rather see price action slice through the 15,690 first of all. Then if this happens, we want to start considering selling. Now, remember that we are not going to be jumping into conclusions. We are not getting too excited. We want to wait for confirmations to happen. So once we see it sight the breakdown of the 15,690, we scale down into our lower time frame, like your 5 minutes, 10 minutes, or 15 minutes time frame, to look out for confirmation. So what we want to look out for in the lower time frame is a sign that buyers are finding it difficult to climb back above the 15,690 level, and of course this would reflect on the chart as a retest of the structure, continued selling pressure, after which we want to be joining a bearish move. Now take note of this. If we join a bearish move here, we want to take note of this ascending trend line we identified on the higher time frame. Now, depending on how price action reacts to this trend line will determine if we are going to be adding more sell position or getting ready to join a second wave of bullish momentum. So the appearance of buy pressure here will welcome buying opportunities, while the breakdown of the ascending trend line will welcome selling opportunities. So we want to ensure that we mark these levels out on our chart so that when price action gets into that area, we will identify it and get ready to be patient to see how the market will react to this level. So this is how we are going to be selling at this point in time. Now, if we are going to be considering buying here, well, the fact that we have been noticing lower highs, it's a source of concern for me. And if we look at the structure closely, let me see what we have here. We can see we have a trend line, descending trend line, which marks out this lower highs we have in this market. So for me personally, to buy it, I would want to see buy pressure resume, something like higher highs and higher lows, leading to the breakout of the 15,750, where I want to be looking out for buying opportunity, where a further breakout of the 15,810 level will welcome more opportunities to capitalize on an uptrend continuation. So on this simple setup we have here, we have a range to work with. So I have said here that below the 15,690 is an area where we want to be looking out for selling opportunities, while the breakout of the descending trend line at the 15,750 will be an area we shall be looking out for buying opportunities. Then we can capitalize on the bullish momentum at the breakout of the 15,810 level. So this is how we are going to be managing our positions on this one for today. So let's mark these levels out on our chart and use it as a reference point to guide our trading activities for today's trading session. So these are my views here on the USTech100. If you have any questions whatsoever, feel free to drop them in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument on our watch list. And you can as well use that time to mark out these levels on your chart so that you can use it as a reference point whenever you're about to make your independent trading decisions. So I see some couple of comments here. BKDMC, thank you for checking in on us. Extra News, thank you, mate. How are you doing today? Glad to have you around. Clank Shoe Bell Spenger, I hope I pronounce your name correctly. If I don't, please, I'm sorry. Thank you for checking in. 8603, good morning to you. Glad to have you around. Abbas55, oh, thank you very much. That was so thoughtful of you. Thank you. I'm getting better, and I hope that the sound is a little bit better than what we had yesterday. Excuse me. Thank you very much on that one. So, in the absence of no questions, I want to assume that we're on the same page. So, we shall be moving on to the next financial assets on our watch list for today. So the next instrument on our watch list for today is the GBPUSD. On the GBPUSD, unfortunately, I had a couple of stop losses hit on this asset as I took advantage of some buy position twice. Remember, let's run through what happened yesterday actually so that we can all be on the same page together. So at the beginning of this week, we identified here that price action was ranging initially. It was caught within the 1.28600 level and the 1.28450 area to give us an insight into the level of indecision at that point. And you know how we do it in this community. When price action falls into this kind of range, we want to wait for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And one thing I made mention here yesterday is the fact that price action is within a very strong accumulation zone, which is a demand zone. And I said here that if we are going to be considering trading at all, that it looks reasonable to look out for buying opportunities. So I said we are going to be having a buy stop order above the 1.286 to capitalize on that move, and then to join that bullish momentum to the upside, since it makes quite a whole lot of sense that we buy above that potential demand zone. Let me show you that demand zone one more time for those who are not part of our live session. So to see it clearly, we want to scale up into the 4 hours time frame. So this is the accumulation phase here, which I buttressed on yesterday, and I emphasized how we have noticed how sellers have been struggling within the zone. So I said here yesterday that it would make quite a lot of sense that we look out for buying opportunities above our key level. Now, for the fact that that was not possible, let me go back into the 1 hour time frame. So we saw how price took us out of both buy position in the loss on that one, and then we saw price break down that support line at the 1.28450 to trigger a sell position. And I told us all, okay, this morning I identified another level at the 1.28340 to capitalize on another opportunity to sell. And as you will see here, price action did break down, retest that structure to incite more selling opportunities. Now, price has gone forward to another breakdown of the 1.28150. As you will see, this was initially the lowest point price action was as before today's trading session, and with this trend line, this line has been broken to the downside now. So for those who had captured this bearish opportunity at the breakdown of the 1.28450, well done to you and kudos to you for being on standby to catch that move, as you will currently be running with about 44 pips in profit at this point in time, giving us the privilege to recoup the losses we made at the beginning of the week on those buy positions we took. So well done everyone for being on standby to catch that move. Now, for those who still have the sell position running, we want to ensure that we secure our positions right now, as we don't want to go into a situation where price takes us out of that position in a loss. Now, with this situation here, the most appropriate area I think you want to be moving your stop losses to is that area between the 1.28340 level. And the reason why we are going to be doing this is simply because we want to give enough room for price action to breathe, with the hopes that this downtrend continuation will be the order for the day. Now, with our positions well secured, and how do we intend to manage this position on the GBPUSD today? What is our plans? And for those who had missed out on the sell opportunity, do we still have a chance to join another wave of bearish momentum, or is there a chance that buyers could come in at any point in time? So while trying to dissect what could happen here on this chart this morning, I was able to identify some parameters which we are going to be using to guide our trading activity for today. Now, the first thing I was able to observe this morning, after considering the nature of price action since last week Friday, is the fact that price action has been very bearish. And to confirm this, we can see we have been noticing lower highs in this particular market. And the next thing I did was to connect a series of lower highs, which is giving us this descending trend line you will be seeing on the screen right now. In fact, we have a couple of trend lines to emphasize the strength of the sellers. And you know how we do it in this community. When we have descending trend lines like this, we have no other choice than to look out for selling opportunities as long as price action remains below the descending trend line. Now, with this situation we have right here, price has broken down the 1.28150, and for those who had missed out on this opportunity, I would require that you remain patient and wait for another structure to emerge before joining any bearish move. And one of the structures that we are going to be looking at to join any bearish opportunity here is to see price action come back and probably retest the 1.28150 or any of this descending trend line. It could be this one or this one right here. That is why I told us to have our stop loss wide enough. So we could either see price come back to retest the 1.28150, this descending trend line here, or this one right here, where the appearance of selling pressure on our lower time frame will give us that opportunity to join the downtrend continuation. So let's mark these levels and trend lines out on our charts, as this will be very crucial in determining what our next line of action will be from this current structure. Then, with the idea of selling the GBPUSD still intact, remember that we have an ascending trend line which we identified on the higher time frame yesterday. For the sake of clarity, let me scale up a little bit into the higher time frame so that we can see what I'm talking about here. Now, we'll scale up into the 4 hours time frame, and on the 4 hours time frame, this is what we noticed at the beginning of the week. So I will zoom out a little bit, and one of the things we observed here is that price action has been very, very bullish, and in fact, we have an ascending trend line here which has been supporting that bullish momentum. So when we connected the series of higher lows, we had this trend line figured out here. So now why this is important here is this. Now, if the bearish momentum continues and continue to drop to the downside, we have a confluence at the 1.29600 area, which shares a confluence with that ascending trend line. So if price action drops and into that structure, we want to wait patiently and see how the market will react to that trend line to determine if we are going to be adding more sell position or getting ready to buy. Now, also note that this 1.296 area has also been a strong buying niche since the beginning of the month of July. Remember, it has been a very strong buying niche. So if price action gets into that area, we want to see how participants in the market will react to that structure. So if we see buy pressure resume, something like a double bottom structure, head and shoulder pattern, or a falling wedge, or any reversal pattern you can think of, then we want to be identifying a neckline, which if a breakout of the neckline happens, we want to be part of an uptrend continuation. However, if price action instead drops and breaks down the 1.296 and of course the ascending trend line, then at this point we want to start considering selling and adding more position to our current sell position in this market. So you can see how important that confluence is and how crucial it is determining if we are going to be adding more sell position or getting ready to join an uptrend continuation. So these are my views as regards to selling the GBPUSD for today. So you really do want to mark these levels out on your chart, as we will be needing them as a reference point to guide trading activities when price gets into that structure. Now, going back into the 1 hour time frame to talk about the potential that the buyers have in this particular market. Now, if we want to start considering buying, like I showed you on the higher time frame, we are looking at buying opportunities around the 1.296 or any reversal pattern that is noticed within that zone, the accumulation zone we identified on the higher time frame. Now, if price does not get that far, that is, does not get into the trend line or that zone that we identified on the 4 hours time frame, and instead it continues to climb higher highs, then at this point a breakout of the descending trend line will be a beautiful signal for us to join a bearish move. And one important thing we should note here is that if price action breaks out of the descending trend line, why do I keep saying ascending? If price action breaks out of this descending trend line, then at this point we want to be seeing this as a sign that buyers might likely be coming in, as a breakout of this ascending trend line will be the first time price will have broken out of that structure in the last 72 hours, hereby giving us a sign that the trend line may no longer have the capacity to continue to reject that bullish momentum. And if that happens, we want to get ready to buy. And remember that we are within a very strong demand zone presently. And if price breaks above the 1.28340, I've identified this level as an area we shall be using to guide that bullish momentum if price action breaks out of the ascending trend line. So if you are a conscious trader, you want to wait for a retest of structure to give us further confirmations to join. And if that is the case, remember that we have very important levels like the 1.28450 and of course the 1.28600, where a further breakout retest of these levels will definitely welcome more opportunities to capitalize on this potential bullish move. But let's see how the market will play out. Presently, things are still looking very bearish, and let's continue to look out for more opportunity to sell. And I told you that we are going to be waiting for a retest of the 1.2815 to see if we can add more position to our existing sell position here. So these are my views here on the GBPUSD for today. I hope I was able to make myself very clear, and if you think you need further clarification, feel free to let me know in the comment section, and trust me, I will be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the last asset we are going to be taking for today. So you can as well use that time to mark out these levels. Very important, as you know you will be needing them to guide trading activities for today. All right. So in the absence of no questions, I want to assume that we're all on the same page here. So I shall be moving right into the last instrument for today. So the last asset we are going to be taking, the next asset on our watch list for today, is of course the XAUUSD, popularly known as the gold spot, which of course is my favorite financial asset amongst all the assets on my watch list for this week. Well, in the last 24 hours, it has been quite an interesting position for us here as we capitalize on a very strong and robust bullish momentum that gripped the market during the first day of the week, of the last trading day of the week, of the month rather. And remember, let's run through what we saw here during the live session yesterday. And the first thing we saw at the beginning of the week was how price action started the week on a very strong bearish note, as we saw price started at around the $1,960.40 level. Then we saw lower lows and lower highs, bringing price into the $1,953.40 level, where we begin to notice continued buy pressure around that area, giving us a clue that sellers struggled as soon as price action got into the structure. Now, the evidence of buy pressure around this area gave us an insight into the potential uptrend continuation here. And to capitalize on this bullish move after noticing the continued buy pressure, I said here that I already had a buy position triggered at the breakout of the $1,956.50 level, which actually happened prior to our live session yesterday. And I told us during our live session yesterday we had a retest of structure, giving us an opportunity to join. Then I also mentioned that we are going to be adding more position if price action breaks out of the 1,960, which of course did. And if you had joined that move, price action moved over from this point over 120 pips in our favor. And if you took it from this level, it moved over 150 pips before the bearish momentum began. And if you had moved your stop loss, like we always mention here in this community, that when price action moves significantly well in our favor, we want to be moving our stop losses to lock in some profit. If you have done that correctly, you must have been taken out with a modest size of profit on the XAUUSD. And for those who are taking advantage of this opportunity, well done to you for being on standby to catch that move. Well, personally, I missed out on the selling opportunity because I thought it will be a retracement of that impulsive move that started this week. Now, going into the New York session today, what is going to be our plans? How do we intend to capitalize on any potential trading opportunity around this area? Now, if you look at the structure closely, you would notice that we had an impulsive move yesterday, which of course we took advantage of, riding it all into that area. And as soon as price got into the 1,972 area, we saw a selling niche. As you will see, price action is back into that zone where we bought, where we had our first buy position for the week, and that is the $1,956.50 area, giving me a clue, giving me an insight into how crucial this confluence is at this point. Now, remember also yesterday we identified an ascending trend line after taking into consideration the nature of price action since last week Thursday. And after connecting to a series of higher lows, we had this ascending trend line figured out. So you can see how this low, let me show you, you saw the pivot low here. We saw what happened here on Friday, and we saw what happened here yesterday during the early hours prior to our live session. And right now, price action is back along that ascending trend line. And one interesting thing about this current market setup is the fact that as soon as price action got into the 1,956 area, and of course the ascending trend line, we have been noticing buy pressure here in the last 4 hours, giving us a clue into how strong the buyers are at that particular point in time. Now, with this beautiful confluence identified here, I personally had my buy stop order above the $1,956.50 level, leveraging on the profit I had made so far this week to capitalize on a potential uptrend continuation. So I'm of the opinion that if price remains above the $1,956.50 level, I want to be holding on to a bullish bias. And of course, you see price still remains above our ascending trend line. And you know how we do it in this community. When price remains above our ascending trend line, we have no other choice than to continue to look out for patterns and structures that will support the idea of buying that asset. Now, in this case scenario, price remains above the ascending trend line, making it look more reasonable to look out for buying opportunities. So at this current market structure, I'm looking out for buying opportunities as long as price remains above the ascending trend line. Now we have more opportunities, more levels here to capitalize on this uptrend continuation, such as the $1,960.40 level. If price action breaks out of that structure, we want to be looking out for more opportunities to capitalize on that move. Then I also have another level somewhere around here at the 1,963, I think. Yes, 1,963 level, which we can also use to add more position if price action breaks out of that structure. So you want to be marking out this level on your chart. So we have the $1,963 level. So if price action goes on to break out of that structure too as well, we want to be adding more positions. Then remember, we also have the 1,972, which happens to be the highest point for this week, to look out for more opportunities to buy. And we have the 1,967. So the bullish momentum in this market has a privilege of giving us multiple entries on this current trading setup if we are duly on standby to capture that move to the upside. Now, in as much as we're looking out for buying opportunity in this from this current confluence, it is very important that we take into consideration the potentials the sellers also have in this market. Now, if we look at this strong bearish momentum that started yesterday, coupled with the one that happened during the GDP data result that came in last week, which showed an expansion of 2.4% in the US economy, bringing price to the downside. Of course, with this signals, we cannot ignore the potentials of sellers. So we are really at a critical point in the market where if we are going to consider selling at this juncture for today, I would rather want to see price action take out the $1,953.40 level, a level which has been a very strong buying niche since last week Friday. You can see how sellers have struggled when price action got into that structure. We saw buy pressure negating the seller's attempt here. We saw the same thing happen here on Friday stroke the early hours of today, of this week. Then if price action comes into this area, I need to see a breakdown of the structure to join a bearish move to the downside. Now, with this situation here, I'm also thinking that we can actually capitalize on a bearish momentum even before the breakdown happened. But if you already have a buy position triggered at the $1,956.50 level, as you will see here, you know your stop loss should be way below, as you want to give enough room for price action to breach. So anywhere below the 1,953, which will dovetail to about 35-40 pips stop loss on this one for the bullish expectation, I mean right here, for us to feel comfortable in that buy position. So for me personally, I want to see price break down the $1,953.40 for me to start considering selling the XAUUSD for today. And if a breakdown happens, a retest of either the structure or that ascending trend line will give me an opportunity to join a bearish move to the downside on this asset. So these are my views here on the XAUUSD for today. So we are looking at bullish opportunity above the $1,956.50 level, and we are looking out for selling opportunities at the breakdown of the $1,953.40 area. So I hope that we'll be on standby to capitalize on any of these opportunities when they finally happen. So it's on this note I would like to call it a day, but before I do, let me take the next 10 to 15 seconds to see if there is going to be any questions as regards to what we discussed today before we draw the curtain for today. So you can as well use that time, that waiting time, to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right. So I see some couple of comments here. Pranoj, hi, how are you? Good morning. And thank you for checking in. 5577. I also saw Dipenda Giri. I hope I pronounced your name correctly. Thank you for the compliment. I really do appreciate it. All right. So in the absence of no questions, I want to assume that we are all on the same page here, and I'm very confident that we are ready to take advantage of potential trading opportunities during the New York session today. So we were able to treat 4 financial assets and do a follow-up detail on them today. The US All Sports, the USTech100, the GBPUSD, and of course the XAUUSD. So let's see how the market will play out for today, and of course we shall be back here tomorrow to review how well they are doing while we get ready for tomorrow's trading session. So please remember, don't forget that we have an high impact event coming in about how many hours from now? I think about 2 hours from now. That is the ISM manufacturing PMI, which of course could bring some volatility in the market. So if you have any positions running, it is very reasonable to secure your positions by moving your stop losses accordingly. So ensure you move your stop losses on all your positions right now. With that being said here, I want to call it a day here. It has been a wonderful moment. I really appreciate every single moment I share with you. And thank you for bearing with me as my voice is getting better by the day, as it was a little bit better than what we had yesterday. So I hope that tomorrow it will get much more better. Thank you for bearing with me on that one. And for those who are joining us for the first time, I hope you are able to gain 1 or 2 things from what we discussed today. And in fact, the more time you spend here with us, the more you get to understand how this works and eventually be able to use the information you have gathered here to make your independent decisions on your own account. So thank you very much, and I look forward to seeing you guys same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well our price action has been doing, how this asset has been doing, and at the same time get ready for tomorrow's trading session. On this note, I wish you best of luck and do have a wonderful evening. Bye-bye, everyone.